It's time now for the market analysis on this week's episode of The Trading Bell. And joining me is Harrison Gitau, the Head of Research at Apex Africa, to break down some of these figures for us. Welcome, Harrison.
Thank you very much.
All right, so let's get right into it with our gainers, because this week we have seen Kenya Ray Insurance Corporation actually see a change of 34.25%.
Yeah.
What are your thoughts on that particular shift?
For Kenya Re's 34.25% increase in price has been attributed mainly to the 3-for-1 bonus issue that they announced. So that has caused a bit of excitement in the market. It is anticipated. But on the fundamental basis, it's just leaves the shareholder at the same level as he was before. So it's just excitement that we expect to die down once the share goes ex-dividend.
Okay.
Yeah.
And another gainer that caught your eye earlier, you were telling me, is Cic Insurance Group.
Yeah.
We've seen a change there of about 12.91%.
Yeah. For CIC at 3.33 shillings, the price was just too low. I think at that level it found a very huge amount of support, and the resulting demand just resulted in a very significant market increase. Also, the insurer is also considering opening operations in South Sudan. So no, not South Sudan, in Ethiopia. So that has been quite well received in the market. So that's a plus.
All right. Well, on to our losers now. INM Holdings Limited there, seeing a change of 49.79% downward trend.
Yeah. For INM, it has just closed. It just closed ex-bonus. It issued a 1-for-1 bonus issue. So at 60.25, basically it's trading at the same market cap. So on a per share basis, it seems as if it has gone down, but on a market cap level, it's still at the same level. So, yeah.
Okay, and finally, one of the other losers is Kenya Airways, again seeing a downward shift of about 11.73%.
Yeah, for Kenya Airways, it's a bit unfortunate. Them trading at 3.58. We were a bit optimistic of the direct flights to the US. We were a bit optimistic about the debt conversion into equity, but it hasn't really paid off. And the current price decline, I think it's going to go even further. So it's not a counter that it's quite exciting in the market.
So especially after, of course, they released their results and they had a loss of about 7.5 billion.
Yes.
So that's quite a mammoth amount there. Yeah. But let's take a look at some of our movers. We're seeing Safaricom, we're seeing Equity, KCB. Any thoughts on our top movers? Safaricom is usually one of them anyway.
Yeah. For the top three, the main concern is their foreign exposure. They're very attractive to foreign clients. There's been a lot of jitterish among the foreign investors concerning the global geopolitical developments. There is a bit of tariff war with US and China.
Yes.
So foreign investors are a bit skittish. So they're exiting emerging markets, and the three counters are suffering as a result.
Okay.
Yeah.
And also our index, you know, we keep seeing this downward trend every week, about -6, -5. Is it very significant?
-6 is quite significant. Range between 0 and 2 is considered not as significant, but more than that is quite huge. We are in a very bearish market. We have firms that are really struggling in the market, so it's understandable that the market price will also take a hit. It's most investors are actually taking hits, so some of them are actually want to catch the bottom. So as the prices go down, you get more and more attractive counters that you can actually venture into. So in as much as it's a bearish market, it still provides an opportunity for value investors who are long-term oriented to come into the market.
Okay.
Yeah.
And aside from our numbers this week, another development that, you know, had a lot of analysts especially talking was one of the things with regards to the Euro bond, because of course Kenya issued a third Euro bond, and that was this past Wednesday, and that was for about 210 billion shillings. So that's to the UK and the US investors. So, you know, with the skepticism is quite heavy, because we've had about, in the past 5 years through Euro bonds, we've accumulated close to 600 billion shillings through those. So what are your thoughts on the trajectory for how we're going to fare with this Eurobond and the foreign debt that we keep on, you know, mounting on and on?
in terms of the sustainability, I think from the government's perspective is that the amount of interest that the Eurobond actually raised in the markets speaks volumes about Kenya's ability to pay its foreign debts. That's from the government's perspective. But from our perspective, we are more concerned about our inability to actually meet the expenditure that we have. We are running twin deficits, fiscal deficit and current account deficit. So that's not a very colorful picture to have. For the Eurobond, it's positive for us in terms of the currency because it just shows up our reserves. So that's a plus. It's a plus that we can look into. But I think the government should be even more concerned about its ability to raise tax revenues. In as much as we look at GDP, debt to GDP, GDP doesn't pay taxes. GDP doesn't pay back debt. It's about the taxes that pay back debt. And as our GDP grows, we've seen a drastic contraction in tax to GDP portions from highs of 25 to about 18%. So that's not positive. And it's about our economy is more led by public infrastructure, public spending. So for the government to be able to raise revenues, there needs to be more of economic stimulus to the market, because in as much as the economy is growing at 6.3, projected to grow at between 5.5 and 6% this year, it's still not felt across the board. So there needs to be much more done by the government to actually raise its revenues and to make sure that the economic growth is felt across the board.
Okay, but even as we, look at these matters, another thing that's cropped up this week was the Seriano cybersecurity report saying that Kenya loses close to 25 billion shillings, to cybersecurity threats. For 2018, that was roughly the amount that Kenya lost. So especially when it comes to financial systems safeguarding themselves online, because everything is, shifting towards that paperless future that we are going towards. Yeah. So what are your thoughts on some of those financial institutions and how they can cushion themselves from these sorts of threats?
For the financial institutions, the best thing they can do to cushion themselves is actually to hire talent. Whatever we are losing in terms of cybersecurity is as a result of human interference into our systems, and we also need the best brains out there to actually safeguard the monies that the institutions hold for the clients, and actually to build trust and enhance efficiency.
Okay. Yeah. And even as we keep on looking at the markets, of course, shifting and so on and so forth, what are your projections for some of the other companies that are waiting, of course, to release their Q1 results? We did see BAT release their results recently, and they had a 22% increase in profit compared to last year. But have you noted something in particular about the companies that have come out with their Q1 2019 results being more or less than expected?
For the Q1 has been a bit mixed. Stanbic obviously above expectations. Equity mainly in line with expectations, though marginally below what investors expected. NIC is just way below expectations. The decline was not something that the market expected. So it's a bit of a mix and match. So it depends with the company's policies, mainly with the banks on matters to do with their loan loss provisions, how they grow their loan books, how they shift in strategy mainly from treasury papers to aggressive lending. So it's a bit of a mix and match. So for some, we expect some improvements, but for some, not so much.
So even as we talk about the banking sector, I think one of the mergers that has been scrutinized very much is NIC-CBA. Yeah. And then we've also got a lot of other banks expressing interest in taking over smaller ones. Yeah. So where is the banking sector then heading, in your opinion?
Increased mergers and consolidations. That's definitely what we've been saying all along. The day has come that we are seeing the reality. But some investors are actually very excited with the mergers because it's a bigger entity, ability to harmonize on synergies and all that. But there are a few investors who are a bit skittish on the payment procedure of the acquisitions because it's mainly by share swap. So that definitely just increases the equity, and the resultant entity is not projected to grow revenue, to grow its bottom line as fast as equity. So that will have an impact on the resultant entity's ROEs. So that may have a dampening effect on the market.
Okay.
Yeah.
Well, thank you, Harrison, for that in-depth, analysis that you've given us. But for now, it's time to get into Markets 101. All right, time now to take a question from you. Of course, you can always tweet it to us. And the question today from Annette is, what is a bonus issue and how does it benefit shareholders? So we're going to let Harrison, of course, answer that for us.
Thank you, Annette, for the question. The bonus issue has been created by interest from Kenya Re and also I&M that have recently issued bonus issues. Ideally, it just increases the number of shares that a shareholder holds, but the underlying value is not meant to change. On accounting terms, it just moves funds from the retained earnings reserve to share capital, mainly to boost up the company's share capitals. But in the market, it creates a buzz. So that buzz creates capital appreciation, and that's basically largely how shareholders benefit.
All right. Well, Annette, I hope that one answered your question. And of course, you can keep on sending them in to us as we keep on answering them next week and so on. But for now, let's take a look at the NSE historical facts. And that's all we had for you on this episode of The Trading Bell. Of course, we had an intriguing conversation with the British American Tobacco Managing Director, Beverly Spencer Obatoimbo, as well as some in-depth market analysis with our analyst of the week, that is Harrison Gitao. Thank you so much for joining us.
Thank you for having me.
All right. On that note, of course, I will remind you that we do have some fantastic pages on social media, so they're appearing on your screen. Those handles is how you get in touch with us and keep up with The Trading Bell. For now, that's it, and I'll join you next time. My name is Malika Kazia.